Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for August 26, 2021. So we've got another semiconductor name. We've pretty much covered all of them. Today we're going to talk about Intel. It's a stock we own. It's a stock we just got assigned on last week, but our cost basis is right around 51.50, so we're already up on it. So now we've got to make the decision: do we want to hold the stock and kind of let it run, if that's the way we think it's going to go, or do we sell covered calls on it? So this is one of those situations, and I'm going to walk you through everything, kind of why I think this. But I think this is a great situation where we've bought the stock at a good price, and now I think it's a good value. We let it run a little bit, and so I'll kind of walk you through again some of my theories behind that. But we've covered all these semiconductors, right? And they all have their place within the industry. So we've covered Nvidia, AMD, which are some of the higher growth names. We've recently covered Micron, which again is having its own kind of issues where there might be a cyclical downturn that people are worried about there. So you've really got a couple different value stocks, and then you've got your growth stocks, right, all within the same industry. And I just feel as you're looking at the triple income wheel, and as you're thinking about your trades, you've got to always have exposure, I think, to the semiconductor industry. And it's an industry that's propelling us forward right now. I mean, we really are in the technology revolution, right? You compare that to the early 20th century, where we had the Industrial Revolution, and those big industrial companies like Ford and Caterpillar and 3M, they were really propelling us forward and driving us, innovation wise. I mean, all innovation right now is coming through semiconductors and chips, right? You think about any product we have out there, from your vehicles to supercomputers and all this stuff that needs processing faster and make the chips smaller, make them more powerful. These are the companies that are doing it and driving it, right? So I think you got to have exposure to it. And so anytime I look at these businesses, whether it's the kind of value plays like Intel or some of the growth names, you look at it and say, I think these stocks are going to be higher 2-3 years from now. And so I feel really comfortable writing cash secured puts on these stocks because of that, because we want to buy these on the dips. And right now Intel is dipping. We ended up purchasing it last week because we got assigned on a previous put we had sold, but again, it was at a price we thought was a good price, right? And so again, our cost basis is about 51.50. We're up a couple dollars already on it, and so we're going to take a step back now and say, do I want to hold it, or do I want to sell a cash secured put or a covered call on the stock right away, or continue selling cash secured puts? Because that's the other option, right? You hold the stock, you collect the dividend in this case, you let it ride, and you can actually sell additional cash secured puts down below the price if you want, because that way we're not capping our upside on a stock that we think does have some room to move. And I'll kind of walk you through the charts. I think there's some catalyst for upside from analyst coverage purposes, because there's a lot of analysts that currently have a hold or below on the stock. So I think there's some room for upgrade, which always ends up helping a stock's trajectory. And I just think that the manufacturing woes that Intel has been having, I think they've been working through it for, quite a bit, and it really feels like the stock's kind of bottoming out at this kind of 52 kind of mid 50s level, and now we may be in a position to potentially test and maybe break out from that range that the stock hasn't been able to get out of for several years now. So let's take a look at some of the data and the charts. Again, the theory is that we want to hold this stock, so let's kind of figure that out to make sure it's the right move. So the stock's trading right around 54. So again, we got assigned at 52, and our cost base is right around 51.50. And so we're already up a couple dollars on it, right? So we could, in theory, sell the stock right now, move on and call it a day with a win. We could sell some, covered calls in the 55 range if we wanted to, but, I think there's more upside than that from here. And, the problem right now, just with the market and, where the market's at, kind of all-time highs and a healthy valuation, we're going to see some volatility. So, I don't know if it's going to be this month that Intel breaks out or next month or 2 months from now, but it's something we just kind of got to watch and say, I think it's worth it to hold, this stock for 2-3 months just to kind of see if we can get that upside. Because I think when it does move, it's going to move fast, kind of as we've seen, and so, I like the rankings for this stock. I like the profile. It is a dividend payer, which is great. Again, that factors into our analysis of, hey, can we hold this for a short period of time? Great safety rating of 8, value ranking of 10. So, this stock's always been a stock that I think is traded at a low valuation. So you get these people out there that's, and especially looking at, what's happened with the business recently, where they've got, manufacturing delays. They are losing some share, but I think they're going to pick all that back up because Intel is one of those companies that, so they're the largest chip manufacturer. I mean, their annual revenues are 70 billion plus. Just to put that in perspective, you got stocks like Nvidia at like 25 billion. So Intel's 3x Nvidia's revenues. AMD's right around 15. So Intel's 6 times AMD's revenue. So Intel is so much larger, right? It really can't have that growth trajectory that it has had historically, but it's also one of the largest fabricators, right, of semiconductors. So they're the ones actually manufacturing the chips. They've got all the plant and equipment. They don't need to outsource it, whereas AMD and Nvidia, they develop the chips, but then they outsource the manufacturing of it. So Intel's kind of got all that in one, but again, it is a slower growth kind of business right now, and so it's always kind of held this low valuation, and so I think people look at it now and say, well, this could be a value trap, right? I'm looking for a low valuation. People look at Micron the same way, because you see these high valuations with Nvidia and AMD who are growing a lot faster, but it doesn't necessarily mean that this is a value trap, right? I think that the stock is down for good reason, and so that's actually a good segue into looking at the chart. This is the chart kind of pulling back even kind of 3-4 years, and you can kind of see it had a little bit of a breakout here in kind of late 2017, but pretty much from late 2017 all the way through now, I mean, it's traded in this, granted it's a wide range, but you can really just see this range it's traded in, right? And so you've got 44 on the downside of this range, and then you've got about 68 on the upside, right? And so the stock last peaked, in early 2020. So just before the pandemic hit, the stock was kind of breaking out, and then all of a sudden, everything fell off. Supply chain issues, came up, but clearly a need for the product, a lot of demand for chips. It rebounded with the rest of the industry, but then the individual kind of issues with this business kind of started surfacing, and so traded all the way back down to the low end of that range. And so you can kind of see it's hit this low end of the range about 5 times. And so this is a situation now where you look at it and say, I think the worst was probably priced in here, and clearly in early 2021 they started getting a little momentum. I think people realized that, the issue they're having is a short-term thing that they're going to work their self out of, and then, just kind of really thinking of the value, that this company has within the industry. Again, their manufacturing capabilities and just the sheer size of the business, the cash flow it generates, has a lot of value. So, it did kind of a failed breakout there. This is kind of sold off again because just of some of the issues they're having, and I think we're getting kind of to that point where I think this bottom here right around 52 the other day just kind of feels like the stock wants to trade higher from here. So we'll look at these levels, but realistically, and I'll show you the kind of valuation charts. The consensus estimate on this stock right now is about 63, right? And so that's 18% upside from the current level. And so I could definitely see, and that's after a lot of these analysts already downgraded the stock. So if you think about from an analysis or an analyst standpoint, they have 42 analysts currently covering the stock, and what was it? 26 of the 42 have a hold or lower, right? So this stock's already been downgraded so many different times, and that's kind of why you've seen, these big kind of moves to the downside. It's usually these analysts that come out, they downgrade the stock, they tell you why, and so despite all that, it still has a consensus target of $63 a share. So that's after all of these analysts have already downgraded and reduced their price targets. So now the situation we've got, I think we've got 16 of the 42 analysts at a hold. You've got 7 at an underperform, and you got 3 at a sell. So you have a situation where, what is that, 60 or 70% of the analysts have actually room to upgrade the stock and potentially raise the target price. And so, when I look at, this stock, and it's a good segue into looking at the valuation. So if you look at the valuation currently, we're looking at, a PE ratio on a forward basis of, roughly 12 times. Okay. So that's actually below, the historical average of right around 14 or 15 times. And so when you look at, this stock at this level, and, you can see how earnings and sales have just kind of plateaued. That's okay, right? We can have earnings and sales that have plateaued, right? We're not valuing this at 45 times like, Nvidia is valued, right? Or even AMD's in the 35-40 range. So this is trading at, a third of the valuation of some of those other stocks. But, this is a consistent cash flow generator, very strong balance sheet, again, generates 3 to 6 times the revenue that these other companies generate. And as long as it stays consistent, right, this is going to be a really good cash flowing, solid business to be in, right? So you could almost justify a little bit of multiple expansion from here, on a stock like this, because you look at 2022 and 2023. I think the analysts are being pretty conservative again because they don't really know how. They know that they're going to work through their issues, but they don't really know, the timing of it. So I think they've been pretty conservative. So, they're kind of projecting sales to kind of stay in this 72 to 75 billion range, and then, they're expecting earnings to kind of stay in this, 450 to 5 range, right? So, really it's just an expansion. You're going to see kind of an expansion over, 2022 and 2023 kind of right in this range, right? So you're going to see stability, but at obviously a very high revenue level and high cash flow level. So you could argue, though, that even if you put a 15 times multiple on this stock, so if you went up to 15 times, say forward earnings, again, the earnings number I think is going to be pretty flat. That's what they're expecting. So 15 times on a 4.5 times multiple, or a $4.50 of earnings, you're looking at about a $67 stock price. Okay. So $67 stock price from the current level gets you right up into essentially the peak range again, right? So this stock could literally trade back up to its peak and really only be around 15 times earnings, which I think is very feasible for that company to be at that level. So then what it does is it gives you, if they have any earnings upside surprises, that's when you get the breakout here. So I think just from a pure multiple expansion from where they are right now to still a reasonable level around 15, it gets you up into this $67 range, which again is about a 25% upside from the current price, right? So I think that's very feasible. So I look at this and say, I've got potentially 25% upside, with this stock just over the short term. So that's the stock I want to hold, and plus I get the dividend. And if I'm selling any other cash secured puts, kind of below that price, it juices our yield even more. So let's take a look at the cash secured puts. So we've got, again, we're still working with July. I mean, you could actually, with this one, if you're going to hold it, even go out further, right? And I'll kind of show you a couple of these. But just if you're going to stay, kind of in this range that we've been looking at recently, these September 17th. So I would probably even go. I would probably go with this 52 for the base. Again, we're looking at that kind of 1%, and if we're gonna, write additional puts on this stock, we want it to be meaningful. And so I look at that chart. Remember that 52 level is what kind of just held recently. So I'm expecting that level to hold. And again, we're doing a short-term option here. It's only 3 weeks out. I would expect, just given the stability that it's shown so far, and I think it's kind of getting some renewed interest from people, that because you look at the money going into the space, and you see Nvidia just rocking, you see AMD rocking, but people are getting worried about those valuations, right? So now they're shifting focus and looking at some of the value plays, which this one kind of fits that bill, and just from that kind of rotation alone, I think you've got probably $2-3 of upside here with not much downside, because I think any additional dips from here are probably going to be bought with Intel. And again, we don't have EPS risk, so it's not like there's going to be an earnings catalyst that kind of throws us off or anything like that. So I would be okay going up here to this 52 level. We get our 1.3%. Doesn't give us much margin of safety, but again, I think that level is going to hold. We've got a delta under 30, which I think makes sense. If you're going to be even a little more aggressive, I think you could probably go up to this 52.5. Again, that's on the low end of what we'd look on the aggressive side, but again, it's got a delta over 30 from that perspective. So I probably wouldn't get too much more aggressive than that, but I think it's again, that's kind of bumping right up almost to the current price. And then if you're going to be conservative, you could do this 50 or the 51, again, targeting that kind of 0.5%, delta under 15 kind of range. So if you're not currently in Intel, I would say, this makes a lot of sense, right? It's got a lower margin of safety than some of the trades we've been used to, but again, it's a low volatility stock. It's a stock that's already pulled back. I think there is probably limited downside from here for the stock. Again, I don't think it's a value trap. I think this is a coiled spring ready to go. And I think there's some real catalyst for that to happen. I think they're working through their problems. You're going to want to get in on the stock before, they kind of announce that everything's going smoothly, because that's when the stock's really going to rip. And then you're going to see all these analyst upgrades. There's so much room with Intel for analyst upgrades and price target increases, and I think that's really what's going to probably propel you to kind of breaking out of that $67, $68 level. So again, we've covered a lot of these semiconductor names. Intel, I think, is certainly worthy of holding, certainly worthy of running the wheel on. And so just kind of keep that in your repertoire. So that's what I have for the day, and take care.